Welcome back. Today I'm going to be reacting to your hate comments and giving my reply. If it's something that is targeting against me, I'm going to clap back. However, if I think you're incorrect, I'm also going to correct you on what it is. So first things first, here we've got a comment. The best thing to do when a company is failing is to justify buying more of its stock because it's cheaper, further concentrating your portfolio and increasing the risk. Love it. If you couldn't tell, that's a little bit of sarcasm there. I suppose a lot of you may not understand that. That's completely fine. Now, in this situation, I completely agree. This is a very common mistake that many investors will or have already made in their investment journeys, and one that I've made myself. But the difference here is that if a company is failing, this is immediately where you should be cutting your losses. You should see this in progress. Now, you might go, well, you're in denial here. Boohoo is a failing company, and that's your opinion. But I've done the fundamental analysis. I've looked into the accounts. I've looked at the business model. I've looked at the qualitative and quantitative data, and I don't believe Boohoo's failing. I don't think they're going away anywhere time soon, and I've said that sentence wrong. And it's not only impacting Boohoo, it's the whole industry. So let's see how it goes going forward. But I don't think Boohoo is a failing company. That said, this could be, we changed that word to the word falling, a falling share price, a falling knife. I didn't anticipate that Boohoo shares would have dropped by such a large margin, and therefore I think I do need to respect some technical analysis in some way, shape or form a little bit more going forward. I should be viewing the trend, looking to take more strategic top-ups perhaps, but at the moment what I'm doing is I'm saying, you know what, I can't do that, so the best next step I can do is just average in small consistent sums of money every time I get paid, and therefore build up a position over the longer term, and only stop investing or sell that position if I fundamentally believe that this company is of a bad quality. Now, the next comment is, Jesus mate, you seem like you're on the verge of a breakdown. Obviously I am. I am absolutely breaking down right now. That said, I think everyone has periods of stress in their life, and I've realized what's really good at solving that. I've got a motorcycle. You can clear your head so easily when you're focused on the road, especially when you fear everything around you because you're on a bike. Anything can hit you, and immediately you're getting hurt. Furthermore, I've been doing a lot of things like meditating. I've been taking longer walks, just taking time to clear my head. No phone, no music, no nothing. You walk out there, you enjoy nature, but you also address all of the problems that are ongoing in your mind and things that you can solve. I've also been doing a lot of journaling lately. Anytime my mind is rambling, I write it down. You might go, why are you journaling? What's the point of that? Well, the idea here is that you write it down. Your brain no longer focuses on that information in your head. You're not stressing about small little problems, and your brain can relax more. It's got more processing power available elsewhere because obviously you've written it down. Your brain now knows that, and you may never look at that journal ever again. It's not to refer to, but it's useful to say that, okay, you've written that down. You can clear your mind, and you'll likely find a lot better with sleep. So actually in my life, especially now I'm going to the gym 5 times a week instead of 4, I feel great, genuinely. And it's fantastic, really. And I think you just master some of these things. The next thing I'd like to master is diet, eating a healthier diet, happier body. And really, it's just a constant improvement. Aggregation of marginal gains is where I would like to go on that regard. Now, the next one is 20k down and you're not bothered. Please tell me you own a property and do not live with your parents, as that is a deposit on a house. In my area, unfortunately, it's not a very substantial deposit on a house, but that said, in that position with that money, I could certainly move up north, could move to the southwest, I could move to another country, and that would be a substantial figure. Of course, that is a large loss in my portfolio that isn't crystallized, but yes, I completely agree. I am actually not fazed by this, and this is because I don't believe it impacts me too much over the longer term, and I feel that the lessons I've learned so far from it, and I think I'm going to continue to learn more lessons from it, are very valuable indeed. I'd rather take a substantial hit to my net worth at a younger age where I'm easily able to rebuild this capital with my annual salary and my income, whereas at a later stage where I've already got substantial figures of wealth, I've now lost the majority of that, and that may take decades to rebuild. That's not something I'm very much interested in. And that said, it's a very, very good motivator. I do very well under pressure, so knowing that my portfolio is down £20,000, I'm going to be focusing a lot more on making more money. How can I improve? How can I become the best version of myself? How can I adapt my strategy and go, okay, you know what, this is what I've done wrong. So now that I'm facing the pressure, I feel that personally in the other aspects of my life, I'm doing a lot better. For instance, my income, has increased dramatically over the last 2-3 years, and I'm making some significant progress to that goal I have by the end of 2023 to reach 100k a year. Do I think I'll hit it? Absolutely not, but I'm still going to try as hard as I can to do that. The next comment is, and to do with the property ladder, I am interested in getting property. I do live with my parents currently. I'm going to be moving out very shortly, but I'm not going to be buying a house. I'm going to be going in a flat share, spare room sort of idea, like on a website, and I'll just be, bills included, all of that, somewhere in the local area, somewhere chill. I only need a very small space. I don't need much to survive, and in fact, that's what I'm doing. I'm now selling down a lot of my assets that I don't need. That drum kit in the background is actually being sold at the moment, and I'm just really slimming down to only the essentials I need. My computer will be going soon. I'll be getting a laptop. I've got the camera and I've got lighting. That's all I need. So I'm going to be slimming down on everything. I'm a very minimalistic person, and therefore I'm able to condense very well. When I move out, I'm sure I'll have many stories to share with you. I've not forgotten about my property agenda, where I'm working closely with an architect and a landlord, and that will have an update at some point at the end of the year. I can't wait to tell you all about it. Now, the next one is, I've been supporting your channel for a while. Got to say, this was not a great video. No one wants to listen to someone repeatedly saying they don't care about losing 20k and only focusing on one company. Now, the real point of this comment is time to get back to what you were good at, i.e. analyzing companies. In fact, why not ask your viewers which companies they would like you to analyze? It may give you some different investment ideas and break your obsession with Boohoo. Now, there's a few points on this, okay? Firstly, this is a fantastic idea for any investor. If you think you're fixating too much on one stock, it's because you're only looking at that one stock. So the best thing you can do is take abundance. You can look at multiple stocks, maybe in different industries or in a similar industry, and constantly evaluate, have I got truly the best investments available? And this is something I'm guilty of not doing at the moment. My attention is elsewhere, but it is something I very much want to improve on, because when you have an abundance mentality, you are no longer so driven or magnetized to one stock. This one stock is no longer as valuable to you, and you're more likely to diversify your portfolio in the process. I completely agree with that. However, when you say time to get back to what you were good at, i.e. analyzing companies, I may or may not have been good at analyzing companies, and that's your opinion, obviously. However, I absolutely did not enjoy it. It wasn't fun for me. The level of research that I wanted to do didn't justify the time pressure that I had. On YouTube, where I was uploading 2 or 3 videos a week, it meant I could only do a very brief and little dive into a company, which I just felt that at the end of the day, I was just an imposter. I didn't know enough about the company, and it usually result in someone commenting saying, you've said this wrong. And it's like, okay, what's the point? If I'm going to research a company, I'm going to nail down on the companies that I care about, because I'm not going to analyze a company that I don't even think has any value, but just because it's popular, because it's an oiler in the AIM market, is unprofitable, has negative assets on the balance sheet or a lot of liabilities. I'm not interested in that load of rubbish. I don't even know any of the names of those stocks, but they've popped up all the time. So you see punters on Twitter all about it at the time. And that said, my YouTube channel is taking a different direction. Analyzing companies, unless very brief and in a 2-minute analysis, is not for me. So I'm not going to be doing that. Or perhaps there needs to be a different approach to be taken. That said, I think I do want to shift the direction of the channel less away or more away from the stock market and more onto development. But again, I've got to develop myself in order to be able to do that. Next one is sell Boohoo. Your losses are unbelievable. Why would I sell Boohoo? Okay, that's a very open-ended question. Let me say this. By selling Boohoo, I now hide the fact that I am a big substantial loss on the position. Selling Boohoo is not a good idea, because all it does is conceal a mistake. I'm going to sit there, I'm going to face the music and say, you know what, this is my mistake and I own up to it. What am I going to do going forward? That's exactly what I'm going to do, because I'm not a coward. I'm not going to sit there and go, oh, I'm going to sell my stock so that I can forget about my mistake. No. If the fundamentals of Boohoo had changed, had deteriorated significantly, no longer of a quality investment, then I would sell. But just because my losses are unbelievable and you can't handle it, that's your problem. The next one is, you don't have a portfolio but a couple of badly picked stocks. It's odd that you continue to share misguided rants here. Please don't make others lose more money listening to this. Whole theory on Boohoo is horse shit. Now, you don't have to watch this video at all. That's your choice to do this. In fact, I think by making a video showing my losses and not lying to you, that it's helping others. They can see what I've done and they can see, okay, look, I made these mistakes. I'm not going to do the same as Ozbourne Foreman, and therefore hopefully I won't lose a significant portion of my net worth. That itself has value. There's also entertainment value. Who doesn't want to see people in misery? Who doesn't want to see people lose money? And you might go, no, actually, I don't want to do that. But then you look at the media and it's sensationalist clicks on negative energy. So you can't even deny that as well. But the whole idea that you're suspecting people are losing more money because of my rants, no. No. At the end of the day, it's down to your due diligence, your investment thesis. Only you can decide whether an investment is worth buying or not some stranger on the internet that you don't even know. You don't even know if my actual name is Ozbourne. Didn't you say Boohoo would hit £10 a share? I remember you were telling your viewers Boohoo was the next big thing. No matter your age, losing money is losing money. Correct. Moron, you don't know crap. It's now hitting 50 pence a share. You're a ham actor. I don't know what a ham actor is. I'm not even going to Google it. I'm not that interested in it, but it's very true. I did make a video 2 years ago, nearly 3 years ago now, in 2020, where I believe Boohoo would reach £10 a share. And I think actually the time horizon of that price change would be within the 5-year period, so 2025, I think. Now, I'm wrong in the short term. I do think over the longer term it will improve. However, given the current economic climate, everything runs in cycles, right? And I do believe at the moment the cycle is unfavorable for a company like Boohoo. So I don't think in that shorter to medium term time it's going to hit £10 a share as quick as I previously estimated. However, the share price is absolutely reflecting bankruptcy, the end of the company. And so buying now, and even if it goes up to £1 a share, you'd be doubling your money at the current price, which obviously is still a very big move to make, but one to keep an eye on and one to really be aware of indeed. Thank you for watching. Have a fantastic day.